The protected pension strategy is an absolute game changer when it comes to securing your retirement income. I'm Ron Sneller, certified financial fiduciary and investment advisor representative. I wanted to share a client case study for a gentleman who just came into the office looking for some help with his retirement planning, wanting to have a solid plan moving forward. So I want to go through his numbers and show you how implementing a fixed income annuity as a protected pension can absolutely change the game and help you retire with more confidence. Let's get into it. All right, first up, a little bit about this gentleman. We're going to go through his executive summary as far as what he's trying to accomplish. So number one, as I film this is November of 2024, and he wanted to have the ability to retire going into 2026. So just a little bit over a year from now. He is pretty risk averse. So you look at point number 2 and 3, which kind of go together. He never wants to run out of money. He wants to have a consistent, reliable income forever. And he wants to retire on at least $6,000 per month. Now, he wants that $6,000 per month to come from guaranteed sources where it's going to be unaffected by market downturns and unaffected by economic recessions. Now, he already has a little bit over $3,000 from his Social Security, but he wants to get the full $6,000 a month coming from guaranteed sources. And I'll show you the reason why when we get to his Monte Carlo analysis. I'm looking at point number 6. He wants to have a proper balance between safe money guarantees and some growth investments. As we analyzed his portfolio, what we found is that his portfolio is actually too conservative, and that causes a lot of problems over the long term as far as having inflation adjusted income. So again, we'll show how implementing one of these indexed annuities as a pension strategy can actually help us be a little bit more aggressive with the investment piece of this portfolio and how it can lead to more sustainable retirement outcomes. He has money kind of spread out all over the place. So he wants to get this, consolidate everything into one easy to understand plan with one manager and one management team. And then at the end of the day, point number 8 is he wants to be able to enjoy his life without worry in retirement, without watching the stock market and without watching the financial news and always kind of stressing out and wondering if he's going to be okay. That's what the protected pension strategy can do when we implement one of these annuities, which can replicate a pension income. It's income that you can't possibly outlive, regardless of what happens with the stock market and regardless of what happens with the economy. Now, here's some of the financial risks that can throw us off track here. Number one, if we have a market correction or a significant loss in our retirement accounts, and if a person's invested too aggressively, right? We find a lot of times people are taking on more risk than what's necessary in their investments, given their goals, their risk tolerance, and their time horizon. But in this gentleman's case here, we actually found, like I've mentioned, he's too conservative. And so the risk is inflation eroding his purchasing power and eroding the value of his wealth over time. Longer life expectancies, we need to plan for longevity as well to make sure that we don't run out of money. So the next report we're going to take you to is our Riskalyze software, which breaks down his current portfolio and takes a look at the risk. Again, this gentleman right here, he's pretty risk averse. You can see that on the risk scale, his portfolio's at a score of 42. He has a pretty decent distribution rate of 3%, a pretty good expense ratio of 0.12%. But what we found with the growth potential of his assets, very, very low growth. We're going to move over to our next report here. This is our Quanti Smart Analytics. And so based on his current holdings, the holdings in his portfolio right now, I run this back to November of 2007. And the reason is I want to include the great financial crisis and that big market downturn in our analytics as we track the performance of the holdings in his current portfolio. And you can see over this span from November 1st, 2007 to September 30th, 2024, the investments that he's currently holding only grew 113% during that time. So that causes a lot of problems planning for his future. Let's take a look at the Monte Carlo here. This is his current investments. We're going to scroll down. Here's all of our inputs and his current asset allocation. We're going to scroll down. So looking at the $6,000 a month that he wants and adjusted for inflation over time, we're going to see that he has a pretty high failure rate here, guys. He has a failure rate of 31%. Only 69% of the time is he going to be successful. So basically, in the worst, almost 1/3 of stock and bond market cycles, he's going to run out of money before he runs out of life. Obviously, this is a problem that we want to correct. And so knowing what I do, kind of combining the best of both worlds with insurance and investments, what I decided to do is take a look at Could we move a portion of his portfolio into an income annuity? So what made sense was to take about 30% of his portfolio and move it into an income annuity as a bond substitute, because an income annuity functions like a pension. So it's going to kick off a guaranteed income stream for the rest of his life. So we were able to bring him from about $3,000 a month of guaranteed income up to $6,000 a month of guaranteed income, combining his Social Security and his annuity. And it only took about 30% of his overall net worth in order to do so. But what that means is that with the remaining portfolio, we could actually invest that money a little bit more aggressively. So this is what his income for life report looks like. So he's going to be working for the rest of 2024 and all through 2025. He's making about $110,000 a year. And then going into 2026, we're going to turn on the Social Security of $37,000 per year. And using one of these guaranteed income annuities, we're protecting and securing $450,000 of his retirement assets. And that's going to give us a guaranteed payout rate on a 1-year deferred annuity of 7.8%. That's going to give him a guaranteed pension. This is the protected pension strategy, $35,000 a year. So what does that do? That brings his retirement income up to $72,000 per year. And all $72,000 are coming from guaranteed income sources. It can't run out as long as he lives. It can't go down due to a stock market crash or due to an economic recession. This is solid, rock solid. It's paychecks rolling into his house every single month for the rest of his life, rolling in like clockwork, consistently, predictably. Awesome stuff. Now, what this also allows us to do with the remaining investments in his investment portfolio, it allows us to invest it a little bit more aggressively, right? So we're going to come down here to his Riskalyze score, what we're doing with him here at Sneller Financial, partnering with Brookstone Capital Management. Now, check this out, guys. This is really awesome. Again, this is why I love to implement an annuity as a protected pension strategy, because what we're able to do on the stock market side of things actually tilt his investments toward a moderately aggressive approach, but with the annuity in his portfolio and then using fixed income notes as a bond alternative, we actually bring the overall risk profile down from a 42 to a 40, but the investment piece of his portfolio performs a heck of a lot better. And this is a game changer. Check this out. We're going to look at the Quanti portfolio analytics now on a comparison, looking at his current holdings, which again, since November of 2007 grew 113%. But look at the portfolio that we're able to recommend for him, right? The portfolio that we're able to put him in actually has grown 282%. So that's more than double, right? Absolutely unbelievable. Now, a standard disclaimer here is that past performance isn't a guarantee or it's not predictive of future results, but there's definitely a pattern here of outperformance. And what we want to do is we want to give ourselves a long-term investment horizon, right? But we also want to make sure that we have that annuity in there for protection in case the worst case scenario happens. So for example, if he retires and he retires into a bear market and another 2008 situation happens again, and it takes 3 or 4 years for his portfolio to recover and come back, guess what? He doesn't have to worry about that because he's got all of the income that he needs secured through that annuity, which is creating that protected pension. So we have all of the income that we need upon retirement, but we have a lot more growth potential in his portfolio to give him inflation adjusted income over time. And this is going to make the Monte Carlo situation pop, because now we've done the best of both worlds. We've given him a very high guaranteed income through using this protected pension strategy, but also being able to invest the rest of the portfolio for growth. So I just simply say you want to buy your income and invest the rest. So let's look at the Monte Carlo analysis with the Sneller Financial solution. Remember, his previous Monte Carlo was a 69% chance of success, and we have literally brought him up to a 99% chance of success, guys. And it's like, how do you go wrong where if you need $6,000 a month, you've got all $6,000 from 2 guaranteed income sources, from your Social Security and your annuity. At that point, the investments in his portfolio, it's really just gravy on top of everything, just to grow wealth into the future and make sure that we have inflation adjusted income. And quite frankly, our portfolio yield, when we go back to the Riskalyze, our portfolio yield currently is a 3.3%. Again, that yield is not guaranteed, but the current yield on the portfolio, I mean, that's enough most likely to offset inflation. So, I mean, there's a chance that he never actually dips into the principal of his portfolio, and we just continue to let the portfolio go and just grow over the long term. But guys, this is absolutely amazing. Again, that's what we do here at Sneller Financial, using the best of both worlds, using the insurance products, kind of like my defensive coordinator, using Brookstone Capital Management as my offensive coordinator. And I'm the head coach, the financial quarterback, to put together a championship winning game plan to help you retire with confidence and help you retire worry-free. I hope that this helped, just kind of going through some of the statistics and the analytics and looking at the annuities and looking at the investment portfolio and what we're able to do to help you revolutionize your retirement so you can not worry and retire happy. I'm Ron Sneller. Really appreciate you guys tuning in. You can click the link below, depending on what social media platform you're watching this on, access my calendar, or to leave a comment to let me know that you'd like me to be in contact so we can review your situation. Because what I like to do, look, let's visit, let me collect your information, put your information into our software. Let me run your scenario, right? Because if I run your scenario and you come back and you're in the high 90s, you're probably good. You probably don't need me, right? But if you come back like this gentleman here and you're like in the 70s or below, hello, Houston, we have a problem. And at this point, all you got to do is say, Ron, I want you to fix it. And at that point, it's just a little bit of paperwork and it's getting some money moved around and making sure that we're positioning your money in your best interest to take care of your goals. Here at Sneller Financial, I'm a certified financial fiduciary, and we're always looking out for the best interest of the client. Thanks again, guys, for tuning in. I hope it was helpful. All righty, take care.